Let's talk about the real estate space, because yesterday the Reserve Bank announced its decision to hike repo rates by 50 basis points. Further, the central bank has also doubled the loan limit from cooperative banks for housing loans. So now it's 90 basis points, the hike that we've seen in rates since the month of May, right? To assess the impact on the real estate sector, loans are going to get more expensive, EMIs will go up. What will the impact be on demand in general? Pavitra Shankar, Executive Director at Brigade Enterprises, joins in. Prashant Bindal, the Chief Sales Officer at Macrotech Developers, is also with us. Ladies and gentlemen, thank you so much for joining us. Pavitra, let me start with you. What do you think the impact of these multiple rate hikes could be on demand and the real estate industry?
Morning, everyone. Yes, it's definitely a change in the real estate. It will have an impact in the real estate sector. But we think right now it really isn't going to dampen the demand that we're seeing on the ground. To put things in context, maybe 3 to 4 years ago, the real estate sector, at least for us, we were doing extremely good sales, despite interest rates being much higher, 8.5%, 9%, 9.5%, 10%. But that did not really dampen the demand for good inventory in good locations. So I don't think it will really have a very big impact in the near term. Affordability is very good for many of our target demographic in South Indian markets. Many of them, most of them, 65% of our target demographic is actually in the IT and ITS sectors. And they have witnessed very high salary growth, job security, and also they have very high disposable income at the moment, which given how prices are also increasing in the real estate sector, it's being seen as a good investment. So even if there is some marginal increase in home loan rates, I don't see an overall change in demand. Potentially, maybe as it becomes higher, people might look at the size of the unit they are buying and try to adjust what kind of inventory they're going for. But I don't see it impacting demand where it actually slows down, at least in the near term.
Hi, good morning. Pavitra, you said 60 to 65% is in the catchment is basically for you in cities dominated by IT services?
So we are in Bangalore, Chennai and Hyderabad predominantly, and most of our customers, 60 to 65% of them are employed in the IT and ITES sectors. That's a clarification.
Okay, I got that. How many, could you break that down a little bit more to not break down IT services, but startups? I asked that question and put that to another real estate company we had, but would you have that breakup number?
Not off the top of my head, but knowing the kind of product that we put out there, which is typically mid-segment and mid to upper segment, the proportion of startups is not that huge. Like our typical consumer that you see is a first-time home buyer, employed in one of our large IT consulting firms based out of Bangalore or Hyderabad, and typically they're able to afford like a 1 to 1.5 CR home. So we don't see too much in terms of startups where people are looking for much higher purchases on the real estate sector.
Prashant, with that backdrop of the customer profile, if I can come to you, for you, I think it won't be IT services, it will be financial services. If you had to pick one sort of underlying market, and financial markets have been in a bit of a turmoil. With that backdrop and with the fact that rates are now starting to go up, what's your own assessment of how this plays out in terms of real estate demand?
Prashant, as we all know that, and as Pavitra also pointed out, that for the last 18-20 months, the demand has been robust in the real estate sector across the markets, and the tier 1 developers have been the biggest beneficiary of it. And what we see is that the demand continues, and the Q1 results are quite 20 days, are about 20 days away from now, but I'm sure the trend that we have seen in last 6 quarters will continue this quarter also, a similar kind of trend. And in terms of the rate hike, the best thing about it is when it comes, it looked very inevitable and everybody was aware of it. The best part about it has been that RBI has been absolutely very clear and transparent in that there is bound to be a rate increase. So we got enough time to prepare for that, to understand the consumer behavior, do the consumer analysis, that how much is it going to impact. So our first cut analysis when we did that extensive research was that up to 100-125 basis points, it will not make that impact. Post that, yes, it starts making an impact, especially in the affordable segment. Now we have to also look at what is the profile who take loans. So for example, in the affordable segment, which in Bombay is about 60-65 lakhs, is 90% of the people take home loans. Whereas in the premium segment, which is 5 crore and above, not more than 20-25% people actually take home loans. So it is mainly on the affordable segment. And in the affordable segment, we realize that up to 7.25%, it doesn't make an impact. Post that, it starts making that impact where people start thinking about it. But there are again two aspects to it. When people buy it, generally they take a 20-year home loan or a 15-year home loan. So the biggest impact is they're more worried about the next 18 months and next 20 months. So how will they manage the next 18 to 20 months? So, and because also, even though Bombay does not have that much of an IT sector, but still the average growth rate is still 8 to 10%. And they also calculate that if they're getting an 8 to 10% growth, they will be able to manage the EMI. So the key is, how do you manage their first 18 to 20 months or 24 months of EMI?
Okay.
So
Prashant,
we did that.
Just a follow-up there, sorry. You said that 90% people buying affordable homes take up home loans, but your projects don't really come in that category. So is it safe to say that you won't be impacted?
No. I'm sorry to say, but 50% of our business comes from affordable segment. We are known because of our brand equity comes from the premium and the luxury segment. But that helps us in the affordable segment because that percolates down to the affordable segment. But last year, 9,000 crore business, more than 5,000 crore business came from affordable segment.
Okay, all right. The other, thanks actually for that clarification. I mean, there is your brand is associated largely with luxury homes, so that's why I made that sweeping comment. But thanks for that clarification. Prashant, the other announcement that came through was the RBI doubling the loan limit from cooperative banks for housing loans. What do you think the impact of this could be? Can you tell us what's the percentage of housing loans that comes from cooperative banks currently in the overall pie?
It all depends on, let me complete the earlier statement,
Sure.
because that's very, very critical. That the consumers are more interested in the first 18 to 20 months. So if you can take care of the first 18 to 20 months, then that impact is clearly mitigated to that extent. And hopefully by that time, the inflation, since it's cyclical by nature, will also come down. And hopefully by 20 months, it will also. So we came up with the perspective that we limit the home loan at about 7%, 6.99%. And if the interest rate goes above 7%, then we pay the additional EMI for the next 2 years, for the next 24 months. So the impact to the consumer on any increase beyond that is taken by the company, and that has given us a huge. That has ensured that it has absolutely made no impact. When the increase happened in the month of May and now also, because we believe that the cost to the sales of this impact will not be more than 1 to 2%. And having taken a price increase of 4% in April and hopefully another 4% post Dhanteras, we believe that we will be able to take care of the cost increase and protecting the consumers and protecting our margins. Now, coming to your other question, it depends on, in the category of 35 to 50 lakhs, almost 35% of the consumers do take the loans from corporate banks, from the cooperative banks. Because as the price segment keeps on going up, the banks are also more amenable to give the home loans. Whereas in the lower category, the cooperative banks, because many of them have their accounts with the cooperative banks. Generally, in that price, the income category of 1 to 2 lakhs who actually buy 35 lakh to 40 lakh products. So in that category, the 35% is, but as the price points increase, the impact of the main banks is much higher.
Just a bit on the cost of construction. Pavitra, if you can tell us, in the quarter so far, how is that trending? A per square foot cost of construction as compared to, say, the previous quarter. We've seen some drop-off in the price of steel, but your sense overall?
We still think the construction costs are going to be quite volatile in the coming 12 to 18 months, not just in steel, in cement, in fuel. So it's very difficult for us to peg down exactly how much we can fix in terms of the cost of construction right away. For a lot of our newer projects that we've recently launched, it will still take time, and we're still exposed on that front to cost of construction. So we are not yet taking a call to say, okay, this is not a concern anymore. We are definitely looking at a short-term, increased input cost environment. So we're taking that into account when we look at pricing our products. And in fact, we had started increasing our prices across the board starting from April. Of course, that doesn't mean that last year we didn't do it. We were certainly taking up prices wherever the market was able to support that. But we have communicated to all of our potential customers that we'll be looking at higher prices in the coming months.
All right, Pavitra, Prashant, thanks a lot for